Hello traders, my name is Logan with Funding Talent. In this video, what we're going to be doing is the market forecast for the week of October 4th. In this video, what we hope to do is highlight the best technical setups that we are currently eyeing up and hopefully acting upon in this upcoming week, and also the most prevalent fundamental drivers for you to be aware of and possibly stay away from should you decide to do so. So without any further delay, let us get right into this video. Here we are, traders. Let us go right into the slideshow for this week. So, to start off with our fundamental drivers, which are prevalent, starting on Monday, we have OPEC meetings all day long and Australian dollar news at 11:30 p.m. EST. As well as that, on Tuesday, we have more New Zealand dollar news at 9 p.m. and 10 a.m. USD news, as well as Wednesday USD news for non-NFP, non-farm employment change. For Thursday, we have the Canadian dollar news at 12 p.m. and then Friday, a whole lot of news at 8:30 for the Canadian dollar and the USD. So the Bank of America released three very interesting statements this week. One, high oil prices this winter might trigger a macro crisis. I want you to remember this because we're going to look at the oil chart later and see how probabilities weigh in regards to a higher oil price. So remember, high oil prices this winter could lead to a macro crisis. Their second statement was U.S. household equities holdings as a percentage of total assets have reached a 70-year high of 50%. That means U.S. households currently have 50% of their net worth in equities, which is actually really high. Global equities and bonds are seeing inflows of capital, especially this week when we saw a decline in the price of SPX, SPY, while cash and gold funds are seeing outflows, which is very interesting to be aware of as well. So the ISM manufacturing PMI in the United States increased to 61.1 in September of 2021, this last month. This is up from a second straight month and above market expectations of 59.6. So that means we beat expectations. Just for those who are not aware, the ISM Manufacturing Index, also known as the Purchasing Managers Index, PMI, is a monthly indicator of U.S. economic activity based on a survey of purchasing managers at more than 300 manufacturing firms in the U.S. It is widely considered to be a key indicator of the state of the U.S. economy. So when this number goes up, it means the U.S. economy is performing better in regards to the managers index. Risk sentiment. This week we're going to stay with risk on market sentiment coming from those good PMI numbers. But obviously there's a couple of things to be aware of, which we're going to talk about when we get to the charts. So for our traders that are new to this series, which I'm sure there will be a couple of you guys after this last week, risk on market sentiment means we can expect the New Zealand dollar, the Canadian dollar, the Australian dollar, the euro, and the pound to appreciate should we continue to see good news enter in the market regarding the economy. This also applies to indices globally appreciating. So we are now on our charts, and I wanted to start off with XRPUSD. We actually had this in our last week's market analysis where I said we found the low and we were going to head higher. This was especially true on Friday, which we saw a very, very strong bullish move to the upside. This, I think, we will absolutely continue with, and I'm expecting prices of XRPUSD to head much higher. My price target for XRPUSD is going to be from the $2.39 range to the $2.66 range. And this also transpires into our Ethereum analysis, which we also called the bottom on, based on the same set of patterns we were looking at across all cryptocurrencies, which we will get into BTC in a minute. But we found that this low formed due to these corrective patterns, which we identified on the market forecast last week. We then said prices will rise, and since then, prices have obviously continued to rise on all of our cryptocurrencies, especially XRP, Ethereum, and Bitcoin, as you'll see in the next couple of charts. But before we go into Bitcoin, I want to show you guys oil. So we were talking about the Bank of America saying we can see a macro crisis if oil prices continue to head higher into this winter. Well, if you've been following the market forecast for the past 2 weeks, you know that that is a very high probability. Why? Because we've retested and almost broken through this trend line, which we will actually close through in 4 hours and 16 minutes if we maintain this high. Why is this trend line important? This resistance line is essential because of the fact that it hasn't been broken since 2008. So if we can see a breakout of this macro-based trend line, we could absolutely see higher oil prices. I would not be surprised to see a $99 West Texas oil price if we can break out of this resistance line. Of course, that's only possible should this not be a fake out and should we not bounce back lower. So it's very important to see within the next week to 2 weeks where we really end up. If we continue through this resistance line, I'm very confident we will continue to see further upside in oil. But, of course, we need to wait for confirmation, as all good trades require confirmation. So that's what I'm looking at on oil, to see what we do around this resistance line and then make a play based off of that. Let's show you Bitcoin now. So Bitcoin is a very similar chart to XRP and Ethereum, as we were talking about that corrective wave which we finished. I wish I could have shown you guys this triangle, but it was not during a market forecast. It was during the middle of the week when this triangle formed, but I was eyeing up this triangle starting around Tuesday. And from then, what we realized was price broke out. This happened yesterday. Was eyeing this up very, very closely. Prices broke out, as you can see, retested this former resistance line, right? We broke out of this resistance line, retested as support right here on this. You can see right here, this bullish, bearish, bullish pattern we have right here. And then we continued much higher with a very, very strong impulsive move to the upside. I expect Bitcoin to carry through with that momentum to the upside. Absolutely. Moving into gold. So we got to the bottom of our reversal zone and the low that we formed recently at this price of 1,727, around that area. We since then have broken out and we formed this kind of falling wedge. We're just at the resistance line now. It's very possible we come back lower, bounce back if we do not break out of this wedge. Or we break out and we continue moving higher. If we break out of this wedge in our retracement zone, I will be confident that we will head higher in gold. But until that happens, I am not confident of anything. I am merely waiting for confirmation. Moving into AUDUSD, so we actually called this for you out 2 weeks ago, I want to say, and since then the trade has worked out spectacularly. We did call a high on this corrective wave. You can go back and watch that market forecast if you'd like, 7th of September. And since then, we've had a very, very, very bearish impulse wave since then. I am expecting a corrective move to play out, so kind of similar to, something like this. And then to finalize this fifth wave around here. But we can look to see where this corrective wave might end, because as you can see, we have some bullish candles right now, indicating we might get that retracement right now. Using our Fibonacci retracements, we're going to draw our golden zone, our high probability area of reversal. And as you can see here, we are nearing it, but we are not there yet. So we're going to wait until we get to that 38.2 to 61.8 area, which we are appearing to get near right now. Right here we are at price, and here is the zone we are looking for, and then a consolidation maybe around that area before we continue to move lower, but I do expect AUDUSD to move lower. EURUSD. So I wanted to bring this to your guys' attention because we found a low here. We called this trade for you guys out, this double top. Didn't expect it to run this far by any means, but if you held this trade, you did phenomenal. This could have been a trade of the year, honestly. But we reached the 127.2 extension level, which is a high probability area of reversal. As you can see, we're finding some support around this level. And if we go down to a lower time frame and delete this so it's a little bit clearer to see, you'll see that we do have a head and shoulders that may be forming. So is it possible we found our low and we're going to head higher? I definitely do think so, and I'm going to be keeping a close eye on this moving forward. We've been very bearish. I'm expecting a retracement. This could feed into that. USDJPY, I just wanted to quickly bring this to your attention as it is at a very higher time frame, a weekly time frame order block, which we pinned off of twice, and it looks like we're going to close off of that level, which would be a very bearish indicator to continue moving lower, especially when you look at this daily time frame. You can see we're very overextended to the upside. I'm going to be expecting somewhat of a reversal in USDJPY. USDCAD, a head and shoulders, which we called out last week, maybe 2 weeks ago, is still playing out. I'm going to be keeping a close eye on this. Here it is on the macro daily time frame. If you want to drop down to a 4-hour, you can see we are just struggling to make it through this this support fractal or support order block, whatever you'd like to refer to it as. But that is the area we're going to be looking at, and then looking to break this neckline before we continue moving lower. Absolutely. So SPX, SPY, same thing. I wanted to quickly go over this with you guys because it's been in the news last week. Is it possible we found a low? Absolutely. Using Elliott wave theory, we can find, we've touched on this in the past. I will not touch on this again because it does take a little bit of time. But a flat correction is a 3-3-3 pattern, which means we have an ABC in wave A, an ABC in wave B, and then an ABC in wave C. So as you can see here, this could definitely be counted as an ABC. And we have that 333 pattern played out. So this is our possibility of finding a low, and then we will continue moving higher off of that low. That is our most probable situation, that we found a low here. The second most probable situation is this is a zigzag correction and not a flat correction. In a zigzag, we have a 535 pattern, which we can count around this area on a lower time frame, which just means we have 5 waves moving lower in the first wave. So wave A, because it's a 535 pattern, right? The first wave has 5 waves. The second wave has 3 waves. And then the third wave has 5 waves, 535, right? So we're waiting right now to see really what that is. This could be the case, but my target, if we are in a zigzag, is this profit zone right here, starting from the 4,243 level. That'll be 424 on SPY, and 4,164 level, also known as 416 on SPY if you're an options trader as well. So that's what I'll be looking for if we form a zigzag. Either way, I do think this retracement is short-lived and we will continue heading higher on SPX shortly. So traders, again, this was our market forecast for the week of October 4th, and I really hope you guys enjoyed this video. I know there's been a lot of changes recently, but we are here looking forward to the future, to a very, very, very bright future. I really hope you enjoyed this video and pulled some valuable insight out of it. If you are not already subscribed to us on all of our social media platforms, be sure to do so, because with this new adventure that we are going on, we are going to be posting more and more, and on our Instagram and our YouTube and all of our social media platforms. So be sure to follow us. As always, on behalf from everyone at Funding Talent, we wish you the absolute best and happy trading.